Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
Okay, so we've already had a shutdown once. We have debt ceiling discussions. We have another shutdown possibly looming, and I know there's been a little bit of agreement on things before. So the dollar has rallied. Gold has also rallied. Why?
That's a good question, Jim. Risk-offy, maybe the uncertainty. I mean, I would throw China in there as well. I mean, we still do the do-si-do with the China trade talks, Jim. So to me, it's one of those things where it might be a risk-off type deal with respect to how gold has rallied, because that's typical risk-off, and dollar has rallied because it's still the world's reserve currency.
Say, though, okay, the dollar's rallied, rates have gone down, gold has rallied, but the stocks are up 18% since December 24th. How can this be risk-off?
Well, it's interesting, too, because I would mix in, too, bonds have really gone nowhere, right? I mean, that's the other weird thing is there hasn't been a lot of selling out there. But to me, these are one of these scenarios, Jim, when sometimes things go bump in the night because there's just some, say, fundamentals that are off.
Personally, I disagree a little. I think there's just too much money being thrown at the system from Europe and from Asia.
Sounds good.
Okay, now before we dive into our trade discussion, I'd like to point out these are trade examples, not recommendations or advice. Scott, go.
Yeah, Jim. So looking at GC today and just looking at the charts, looking at some breakout levels, looking, as you mentioned, at volatility, just all the crazy things going on. There's a pretty interesting example I found out there today, which is buying the March week 1 1350, 1375 call spread. But financing that by selling a 1290 put in GC. This all expires March 1st. The risk I have on this is being long gold at 1290, which is a level I kind of identified as a decent breakout where I don't think it's going to penetrate that on the downside. And the reward, of course, is the call spread that fills out at 2500 because of the fact that I financed that call spread by selling that put spread for the same expiration.
This is interesting. Now, this is an aggressive trade, an aggressive expression of your long. People sometimes think selling a naked option is risky, and it is. However, if you know exactly what that risk is, and the risk is being long the futures at 1290.
Which I don't mind.
Right, and if you're comfortable with that and can manage that risk, I think the trade makes sense.
Right, and the other thing I like here is that if gold goes nowhere until March 1st, then I kind of got a little bit of an expression at that call spread, or a shot at that call spread on the free throw line, let's say, for no cost.
Right, so mine is a bullish expression as well, but mine is considerably less aggressive than yours. It's funny because the call spread itself is down 25 ticks, meaning it was seeming like a more
your
aggressive call
expression,
spread.
got it.
Yeah, but not selling 1290. I'm talking about the March 1st buying the 1325, 1350 call spread for 4.2 ticks. So it risks $420 to make a potential 2080. Now, the advantage yours has, if it stays right here, I lose my 420, where you lose nothing if it stays right here. And volatility's been low in gold.
By financing mine, correct. But here's the other interesting thing about both of these expressions, Jim, that I just think is striking in a way, is there's not a lot of premium on the calls right now. I mean, that's what's kind of interesting to me is the market, as you like to always point out, kind of feels like maybe gold is hitting maybe some near-term resistance because the calls, to me, are pretty nicely priced.
So you say because the dollar and gold have rallied together, which is traditional in a classic kind of risk-off, almost panic scenario. But we're not seeing that anywhere else. So you think that could be indicative of something under the surface?
I do, because it's just traditionally not what we see. Okay. And this has been an interesting environment from volatility as far as how calm things have been. So it's about time maybe something pops.
Amen. Thanks for joining us on Market Movers. I'm Jim Uriel, where we're helping to make you a better trader.